Last week's lower than expected US CPI read continues to spread through markets, with the likelihood that for the first time in a while, attention may move away from King Dollar. So to help us understand where attention may be focused, joining us now is Peter McGuire from XM. Peter, great to have your company to kick us off on this Monday morning. It feels like the markets are trying to position for a new world where inflation is moving lower. Do you believe the hype? And I suppose what's price action telling us?
Well, good morning, Kyle. Well, signal, not noise. Yes, I got to take on board those numbers coming out of the US, but where you're looking at as far as the UK, we're approaching 11% for October. So maybe it's going, some places it's looking positive, and other places, parts of the world, it's looking negative. So we've just got to see how this week rolls. But hopefully the US is going to be the good sign, and we've got some good news ahead of us.
Yeah, so tell us about the consumer. I think it's the UK consumer you wanted to talk about here. Clearly we had the US consumer sentiment out on Friday night, diminishing just a little bit. That's to be expected, I suppose. The state in the UK, at least what I get anecdotally, is terrible and becoming worse. What's happening over there?
Well, that's exactly right, and we're conscious as far as you've had numerous prime ministers over the last matter of months. If you're looking as far as the inflation read, and there it is on the graph there, or the chart, approaching 11% possibly for the October read, and the overall weakness across the whole UK economy. You've got one good thing, I think, is you've seen a fair bit of strength over the last matter of days, Kyle, with the pound back at 118, so 1.18. So that just shows that US dollar tailing off, and strong move to the upside for a lot of the currencies. And how we roll this week for the pound, I'm expecting some news. We've just got to see how everything rolls and what impact it has to global markets.
Yeah, absolutely. Let's hope a little less volatility than what came about a few months ago. I'm sure that was extraordinary in a flash in a pan, but nevertheless, still bad over there. What about US retail? Everyone's been talking about this reversion to long-term trends that will have to happen in US consumption after the stimulus boom in the US. How is that looking at the moment?
Well, exactly. We're expecting that read this week. So that's the big one that everyone's got their focus on, US retail sales. You've got US CPI, it's now below 8%. The dollar's tumbled, and we've just got to see what impact it has to the consumer. And the read is the read. So there's the forecast on the chart there. And hopefully it's going to be around that sort of number. But we've just got to see how the data drops and the overall theme across the US. You've still got very, very high fuel prices, and that impact to the consumer is certainly severely felt. And wage growth also is not where we probably want to be if you're a wage earner.
Yeah, if we get some, say, soft US retail sales, are we in that world of, bad news is good news, stocks go up because the recession comes all the more quickly, I guess?
Well, that could be the case. We've just got to see, we've had a fairly strong rally as far as US equities over the last matter of a week. You've seen that big sell-off as far as dollar, so that's being supported. And I'm just keeping a close eye on where this week rolls, because last week was probably one of the best weeks for trading that I've seen in many, many years. And I don't think that this week's going to disappoint either, because the market is absolutely dynamic. And I just think it's a fantastic time of the year, Kyle. If you're not making a dollar now, have a close look at yourself.
Yeah, I'm sure if it were me, I'd find another way to blow it up. But that's just my poor temperament, I think, more than anything else when I'm trading. But let's just chat as well, Japanese CPI, because, well, we've gotten used to Japan being the kind of outlier, perhaps. Inflation pressures building, but certainly not like what we've seen in Europe and the United States and Australia as well. What do we expect from the inflation figures out of Japan this week?
Well, if you look at first off currency, we got a 139 read. You were nearly at 149 only a matter of a couple of weeks back. So you've seen that huge sell-off as far as, or strengthen as far as the yen. You've got GDP out tomorrow for Japan. We're expecting 0.3% quarter on quarter in the third quarter. So that's going to be a fairly solid number, and that's a nice clip along. And you've got the CPI stats out Friday for Japan. So yeah, it's a big week for our northern neighbours, and let's see how all that drops and what impact it has naturally to the value of the yen. I wouldn't be surprised, Kyle, you might even see a 138, 137 this week. It's been a massive move, so yeah, just dramatic.
Yeah, really remarkable. I suppose with the Japanese yen too.
It is remarkable.
Yeah, I mean, I sort of checked out a little bit on the Japanese yen for a couple of days there, just through my own negligence, and realised that yeah, we're down at about 141 out of that CPI print. I mean, just that kind of momentum to the downside, I suppose, or the upside for the yen. Does it just sort of indicate that, you know, this is a real trend changer?
Well, yeah, and I think also the other side of it, we've got to be conscious. It was only probably about 7 weeks ago we were at that 115 handle for the US dollar index. You're now sitting, what is it? I've got it on my read here, 106.50. So that gives everyone a real indication. You've seen such a dramatic fall as far as US dollar. You've seen all of those other currencies really ratchet up very, very strongly. And the yen has caught that tailwind. We were only having intervention a little while back, Kyle, when it was approaching 150. Even 145 was that handle. And now looking at 139. So, yeah, the currency markets are absolutely on fire.